All right. Good day, everyone, to everyone watching this. My name is Giordano Bertin-Maurice. I am one of your hosts on the Crypto and Coffee podcast. I'm joined by David Blackstone and Cordell Tanny. And on today's episode, I highly advise you guys grab your cup of coffee or even hot cocoa. Cordell, you said it was like minus 20 degrees in Canada.
Well, Montreal, don't forget, Canada's a big place, and I'm sure there are many places in Canada where it's like minus 30 or 40 right now. But no, today we're right around freezing, but by Wednesday, Thursday of this week, yeah, we're going to get our coldest temperatures that we've had. It'll be minus 21 Celsius by next week on Sunday. That's the high.
Sounds real bad. So, I would advise tea today. We can grab some hot cocoa and enjoy the podcast going forward. But sorry.
I said I got my tea already. It's all good.
Well, that's fine. So on today's episode 9, I think we started off the new year a bit, let's say, for lack of a better term, very exciting. With the geopolitical events that's going on, right? So we have Canada invading Taiwan, and then we have Trump invading Venezuela, seizing different oil tankers. Russia and China's got involved. So my question to you guys is, right, seeing as how all of this geopolitical events are happening, how does this affect crypto going forward? Or how does this affect the blockchain industry or even technology for that matter? Right.
I have a question though. First, sorry. Did you say Canada was invading Taiwan?
No. It was China side.
I heard you said Canada was invading Taiwan. I'm like, our Navy is like one guy in a rowboat with a mounted machine gun. I don't know what kind of an invasion that's going to be like. Okay, sorry. I did not mean to disparage the Canadian Navy in any way. We actually have an amazing Navy, but I just don't see us invading Taiwan.
Did you tell the guy?
What did I tell?
You tell the guy he's your Navy?
Yeah. No, the reason why I said that, there was a funny meme, like this is going back in 2000 when the US first invaded Iraq, when the whole thing after 9/11 and they were invading Iraq. And then there was like inside my company, somebody sent like an image, Canada sending its Navy to support the effort. It was just one guy in a rowboat with a mounted machine gun. It was funny. So that just always stuck in my head when everybody says Canada's invading somewhere. I'm like, unless we're doing it through hockey, I don't know what kind of invasion you're talking about. But you could have Celine Dion. I mean, that's one form of invasion that's all yours.
I hear you. But I meant to say China if I said Canada previously. But how do you guys think that these events are affecting technology or even like the blockchain industry going forward? Because for me, I think that right now it looks like a heavy market crash, right? And the market is just shaking people out. It's bleeding. Seeing as how Trump invaded Venezuela, suggesting that the stock market's probably going down right now. But what are your thoughts, Cordell?
Well, I think everything is supporting the stock market right now. If the stock market is just like complete, euphoria, it's discounting all news. But one thing I will say, just to start that off, I mean, look, geopolitical events, and this is something I try and get all of my students to understand right away. I'll even ask you two guys this question. What is the single most important driving force of the markets or asset prices? What is the main driver of asset prices?
Are we looking at considering inflation or inflation?
All part of it. It's all part and parcel of it. But it's one key thing, one key player that essentially drives all asset prices.
I think personally, I would say momentum in general. Momentum
works. It's a factor. But the main thing that drives the market, it's liquidity. It's how much money is floating around the system. When you have a lot of money in the system, banks lend. If banks lend, companies could borrow. They could invest in operations. They could hire more people. This is what drives the economy. This is what drives it, which means it's the Federal Reserve. It's interest rate policy that dictates how much money is circulating in the system. The question then is, do geopolitical events affect liquidity? And the answer is generally no. They have to be one hell of a geopolitical event before it actually starts affecting credit. So credit is by far the most important driving force of any economy, and of pretty much how the stock market's going to work. As long as the companies have money to borrow and invest, things tend to do well. That's why credit spreads, monitoring the spread of a corporate bond versus a government bond is one of the best indicators of seeing any kind of stress. So until you start seeing what we call credit spread, so credit spread is, just for those that don't know, imagine you have two bonds. Both of them come due in 5 years. One of them is a government bond, a US government bond. The other is, let's say, a high company. Let's say it's a Walmart bond that comes due in 5 years. They're the same thing. But the Walmart one should pay you more interest than the government one, because Walmart can go bankrupt. The US government, in theory, cannot, because they can just raise money through taxes. So there's always this spread of a corporate bond versus a government bond. And the measure of that spread is the health of the market, because it's pretty much telling you how much people expect, like what's the risk of a company going bankrupt. When these credit spreads start blowing out, when the demand of investors to be compensated for the extra risk of a company going bust, when these spreads start blowing up, that's the first sign normally that something bad is coming in the market. Credit spreads are like really tight right now. So none of these geopolitical events are affecting the markets per se. If they do, it's a short-term effect. It's just like dropping a pebble in a pond. You get a couple of ripples, dissipates quickly, everything's back to normal. And that's pretty much what you've seen. I mean, the Venezuela event was essentially completely like a non-event in the market. The Iran threats were a little bit different because that, Venezuela has no oil really going into the markets right now. Iran is a much bigger player in terms of it. And that hit the oil prices. But then, Trump says, okay, no, we're holding off. Oil prices came right back down. So in any event, the geopolitical events, we're always going to have geopolitical events. I think what it then comes down to, when you do have geopolitical events, people tend to flock to the US dollar or the Japanese yen as their safe havens. So people will buy yen, dollars, they'll buy Japanese bonds, they'll buy US government bonds. Will they buy Bitcoin? So that's one way to look at it. In the face of geopolitical events, will Bitcoin serve as a safe haven? So that could be a theme for 2026. Did we see much of that so far with Venezuela? And it turns out Venezuela was holding a lot of Bitcoin reserves. I remember reading after that, right? I think it was discovered that they were doing a lot of business in Bitcoin. I think that is actually a very interesting topic, is how much more sovereign adoption are we going to be seeing of Bitcoin as a reserve currency? I think that is going to be an ongoing theme. And if it is going to be a reserve currency, will it be Bitcoin? Why isn't Ethereum a reserve currency? Like, what is it so special of Bitcoin that makes this the reserve currency and not Ethereum? So just, geopolitical events, it's just like they really have to be one hell of a geopolitical event before you start going to see effects in the stock market. How that's going to move to the crypto market, well, this is what we should discuss, right? Because I guess we can consider the crypto market a leveraged version of the stock market to a certain degree, right? It's just a riskier asset base. So how will that react? And, then just what direction we see, like say, without geopolitical events, what's going to drive these things for the next year?
Yeah, I completely agree. And one of the things I wanted to ask you, Cordell, you did mention that Venezuela does have a lot of oil reserves, but it isn't in the market per se, right? So based on the outcome of the geopolitical events that has been happening between US and Venezuela, Trump has seized a lot of oil tankers. If Trump is actively selling and getting Venezuelan oil and pushing that into the market, do you think it's going to really affect the oil prices, as well as whatever else has to come with the stock market and the crypto market?
Yeah, I do. But one thing to always remember is that the oil is very political, so it's very hard to make predictions on it, because one country could just OPEC plus could just come out, oh, we're restricting supply, and then prices skyrocket, right? So there's just so many different factors affecting the oil market right now, just between Russia and selling everything at a cheap discount on technically like a shadow market. So, I mean, Venezuela's been, really mismanaged in terms of their assets. So, they have, I think it's the third largest reserves or second largest reserves. I think it might be second.
No, they have the first largest.
It is even after Saudi Arabia.
Yeah.
Okay,
I think Saudi Arabia is like third or fourth, if I remember correctly.
Okay, so and also remember that Venezuela is heavy. It's a heavy crude.
Mhm.
So it's not a light sweet like you get out, of Saudi Arabia, where you stick your finger in the ground, oil comes out, and it's easy to refine and it's easy to use. Venezuela is much like Canadian oil. It's heavy, and it needs a lot of different you need specialized refining capacity to get this to the final product. So yes, I think it poses much more of a threat, honestly, to Canadian oil. But right now they're pricing it at a little bit of a premium. So if they're going to the Gulf Coast refineries. So, I think a lot of it is just that if you start pumping out a lot more of it and you start putting it on the market, you're going to have a supply glut, right? And oil prices are already hovering around $60. If Venezuela comes full out into the oil market, that is, in my opinion, bearish for the price of oil. I don't see, why it wouldn't be, but again, you have to wait and see. But, it's not like going to happen overnight where all of a sudden Venezuela is going to be ramped up to full production. The amount of money needed to get the infrastructure and everything going is quite a bit. And as you can see, not all U.S. oil companies are, ready to invest in what they consider a politically unstable area. I mean, that's rule number one for overseas investment is you need stable politics. Without it, no one's going to invest. So it will affect the price of oil in a bearish way if Venezuela comes full back in.
Yeah. Can't say anything to that. I completely agree with you. And
But
I
it's still
think
all hypothetical. Again, it's still all hypothetical. So it's based on a lot of the research I've been reading from various, the oil analysts and stuff that I read and the research that I get on a daily basis.
Yeah. And let's also talk about, Trump going to Greenland. I think this right here is another big event that it's January January isn't even finished, right? We haven't even reached the 20th of January and all this is already unfolding the way it is, right? Do you think that Trump also going to Greenland is a power move for, let's say, the stock market, right? I think this is more of like a military move from how I envision it. But I would like, David and Cordell, what are your opinions on this?
David, go ahead, man.
Yeah. Now, I don't remember what Greenland had, but I'm pretty sure that it had something that's not just port control. But if nothing else, there is port control as a way to try to keep keep BRICS out of the West. Now, I do still think that Venezuela was the U.S. responding to BRICS, not because of the oil, because Maduro offered the oil like a month or two before Trump did all of this stuff. So I do still think that it was a response to BRICS. Now, with BRICS being in the position that they are, like for example, being able to copy NVIDIA's machines for chip production, which was supposed to be the entire reason for keeping China out of that market. Responding to BRICS, trying to keep them out of this hemisphere is important. Now, whether or not there's going to be trading, allowing the U.S. to keep the Americas while BRICS can essentially trade with the rest of the world, allowing all the rest of the world into BRICS. I don't know. It could be that. It could be something else. Maybe they respond to this, and it just takes them a little bit of time. Maybe they don't. Maybe they do. Maybe they do trading. One way or another, it does end up being something related to relating to the U.S. market and how that affects its different assets. With that, the U.S. is this could be. These two could be good moves for the U.S. Control of ports means you get money. Control of oil means you get money. Now, it's not necessarily going to be good for those countries because, for example, with Venezuela, like they've got a lot of minerals, they've got a lot of oil, and if you use those, then you can get those rare earth minerals that you used to get from China from there, which means that you can still make your computers and you can still do all that stuff. It's going to end up negatively affecting the environment of Venezuela, which isn't great for them. That with the oil, if that all goes towards paying the U.S. debt and it doesn't go to the Venezuelans, well, that's good for the U.S. It's not good for the Venezuelans. Both of these things could be good for the U.S. In which case, for example, you get to pay down the debt. You get to, if they actually look at it instead of enriching their own pockets, then you get to pay down the debt. You get to actually help make things move forward with regards to, for example, computing, because you're getting your own supply chain back up. So all of that stuff is beneficial for the US and could push up the market if they make the right moves. Throughout the last few years, they've not been making the right moves exactly. So like, who's to say what they do? And that all depends on politics. Like, will these politicians make the right moves or will they not? I really doubt they will. They've been very, very silly for the past couple of years. I don't expect them to do the right thing at all. But this is a path that they could take. And if things go well, then that means there's going to be future stability for the US, which means that that people are willing to invest in tech going forward. And since tech is basically the group that's propping up the entire market, that would be good for the market. Additionally, if you were to have the oil companies take over that stuff, or if you were to have supply chain companies pop up and enter the market, and then you can invest in them, that could also push up things. Not as much, but it could. So like that would help bring in money for there. The downside here that I see is like, for example, invading Venezuela, like the market went up on that. Like people were probably thinking, hey, yeah, we can get this oil now, something along those lines. But I do see another option there. What happens if BRICS gets up their markets? Because they could potentially get up commodities markets. They could potentially get up stock markets. You've already got the Hang Seng, and I'm pretty sure that one was China's market. It could be China's. It could be Singapore's. I bet. I don't remember which. I think it was China's.
It's China.
Yeah. So you've got the Hang Seng market for stocks. You've got a commodities market over there. I don't know what the name of that one is, but China has a commodities market. If all the money moves over to there, then and starts playing around in those markets, they're not playing around in the U.S. markets anymore, which extracts liquidity. So the better that BRICS does, you could potentially have money move over there instead of staying over here, which would drop the stock market over here, which would be the first instance that I would know of where hyperinflation does not. Well, hyperinflation could still push up the stocks over here because those would be in dollar value. But if it's all the rich moving money over to the Chinese market instead of putting it in the market over here, then yeah, that would be the first instance historically of hyperinflation not contributing to the market pricing, like it did, for example, in Weimar Germany. Venezuela, and I think it was Zimbabwe. The markets rose as hyperinflation hit because of all the previous factors, and the stocks rose on that. Like stock markets did great until they were closed, because if you have $1 turn into if you have the value of $1 turn into $1 million, then your stocks are going to look pretty good. The number is going to go up. The value won't, but the number will. So in this case, I would think that it would depend on where all the billionaires and trillionaires put their money, and where that ends up going, I don't know. But the move in Greenland, it could potentially be good for the U.S., at least for the near term. If they can buy a few years, great. We can get our money up, and we can also move.
Yeah, I mean, I think the comment on BRICS, by the way, is a good one. It's because it's not one that you really hear a lot about. So, and I think there's actually a lot of that makes sense. I mean, I don't know if you're giving the U.S. government too much credit by thinking that they've had such such like, I don't know what the right word is, but plans like that. Oh, while we're doing this, we're really doing this to counter BRICS. I don't know. I think you might be giving them a little too much credit, but it is absolutely plausible. When it comes to Greenland, I mean, look, Greenland, what you were saying, you weren't sure what else they had other than just the military. They do have a minor amount of rare earths, right? So they do have the rare earth elements, which is a key theme, obviously, because they need for semiconductor production and just advanced technology. But look. Again, the amount just is like, oh, let's give money to Ukraine for rare earths. Ukraine doesn't have rare earths, okay? Like every country's rare earths is such a small amount compared to what's in China and then to a lesser extent, Russia. So you can go after Greenland all you want. The proven reserves of rare earths, it's not worth jeopardizing all of NATO, okay? It's not, and that's what's happening right now. Will this affect the stock market? I doubt it. Again, like until it hits the credit system, the banking system, all of this is just noise. right? It's just noise. It's just like the three of us are no different than people on CNN having these exact same conversations there right now that really have no idea what is going to happen next week or what the effect is going to be. So I would just say, look, keep it simple. Keeping it simple means you monitor the credit markets, you monitor the Federal Reserve, you monitor liquidity conditions. If you start seeing liquidity tighten, meaning banks are saying, we're not lending, we're nervous, that's when stuff's about to happen. All right. So, almost every major crisis and major, call it a recession, whatever, has started with a credit crisis in one way or another. Okay. What causes the credit crisis is a different story every time. So right now, to me, all of this is just a little bit of noise. I think the bigger implication is if this does have a ramification for NATO, and, because right now you're going after all your allies. All I see is China and Russia sitting back laughing with some popcorn going, oh, this is amazing. We didn't even have to do anything. So, that to me is where I think the risks will lie, is at what point, if it continues to hit the trade, if you continue to wield tariffs like a weapon like this, it eventually will hit the credit markets. Absolutely.
Did you ever see that Mario Party video where all of the players are on that block of ice, and all the Mario characters have to run around on these balls and try to knock each other off? All of them are moving around and rolling into each other, and they're all falling off the side. But Luigi is just standing there, and he wins by the end because everyone else is just
I've seen that on TikTok before.
I haven't seen that.
Yeah, that's basically what China's doing right now. It's just sitting around doing nothing. It's like, oh, hey, I won.
Yeah.
Yep.
This is just a thought, right? If you do look on the map, right, if BRICS or Greenland joins BRICS, it technically is, BRICS is technically surrounding America. I think that is what Trump wants to avoid with trying to seize Greenland and its ports and its minerals right now, right? I think he still wants to keep in control throughout, the next term he's going to be inside. So that is just a thought.
I think we're giving him too much credit if he's thinking that far ahead, honestly. I think he's more impulsive and just, like instant gratification than having some grand plan for the future. What do I know? Could be wrong. But, even so, I mean, even if that is the case, right? First off, like, are we saying Greenland would join BRICS? No, because Greenland's part of Denmark, and Denmark is not joining BRICS. And again, we've been over this. Like, BRICS is an issue, but ultimately BRICS is still, an amalgamation of disparate systems that don't work well together. Each one of these countries have different systems. So like BRICS would really need to get their act together into some sort of unified infrastructure to actually be a force worth worrying about. And I don't see that happening just yet. I'm not saying it's not a danger. I just don't see it as an imminent one. No, I just think the whole thing with Greenland, I don't know what it is. It's just like, look, they have a base there already. If it's really about security, all right, just sign a deal with Denmark to allow you to station more troops there or to take over Arctic security. I mean, I was reading today that even he's behind doors, he's saying to his aides, Canada needs to do more to protect the North. I just think they need to have some kind of, overall agreement with all of the northern countries, Norway, all of the ones there, and start coming to some collaboration on, let's say, NATO control of the North, as opposed to just targeting people with tariffs to try and take over an island. I mean, you don't need to take it over to enhance security, right? They have a base there already. Just get more, get a better plan together, get more troops there. Get a base up, and you have a couple bases in northern Canada. Put a couple in, Norway and Sweden, which are now part of NATO. Seems to me like you can get a good plan together if you talk about it instead of threatening each other. Or, sorry, I think there's only one party doing the threatening. But anyways, yeah, and I just don't like. I mean, this is all politics. Like, and when it comes, but if we bring this back down to crypto, I mean, like the crypto markets, if you think about it, I don't really see them reacting to any of these events at all. If anything, like, crypto has been stuck in this range between, let's call it 80, well, I'll say Bitcoin's been stuck between 82,000 and around 94, 95. So, and Bitcoin is always at its most dangerous when it's stuck in trading ranges because you just don't know where it's going to go. And so often when we've been stuck in these trading ranges, which is coming back to, beginning, Gio, you said you see a lot of risks and you think that a lot of the system could be breaking down. That's absolutely possible given it's stuck in the trading range. I mean, granted, if you look at the charts of Bitcoin, it's making higher lows right now. It's testing its resistance at 94.95. If 94,000 could hold, it's very bullish, but nothing is stopping this from just breaking down. If it were to break down at this point, I think it's just going to be a general risk-off sentiment. So, do you believe it's going to be, let's look at it this way. What would trigger a risk-off sentiment right now? Okay, tech valuations, poor earnings, inflation. These are the main things that people would think of that could drive a risk-off kind of scenario, leading to an economic slowdown and recession. Where do geopolitics fit in that? Again, the geopolitics would have to be some crazy event to actually trickle down into the financial system. So if that's what we think, the risk on versus risk off, we're clearly in a risk on mode right now. Okay, so the market should be supportive of Bitcoin right now. Okay, granted, NASDAQ stuck a little bit too. The risk assets have been stuck other than semiconductors, which have just rallied to they've really rallied based on new deals with Taiwan Semi and all this and memory like Micron, all the memory companies skyrocketing now because of how much of the memory is being used for AI. Yeah. So that's the only area of tech that's been doing well and everything's been left behind. So the risk on segment's been stagnant. So I think it just comes back to the initial question, what's going to push it up or what will push it down? And I think that's really the question.
Yeah, I don't think there's very much to push it up right now, at least in the U.S. market. With everything that's been going on, and this has been a trend for years now. BRICS has been growing. The U.S. has been increasingly been making the wrong moves. This has been what, 6 years ago, 5 years ago? No, it was actually more like 2 or 3. In Biden's term, when they sanctioned Russia, that ended up showing the world that, oh, you can still trade despite sanctions, showing the world, oh yeah, you can trade with other people. There are 180 other countries that you can trade with. So that wasn't exactly a great move. Before that, shipping all the manufacturing over to China, the manufacturing that actually made the U.S. the essentially the center of the world, moving all of that manufacturing over to China, that wasn't a great move. This trend has been happening for years. So when I see things that are happening now, where the U.S. is basically its primary export has been the dollar, just like green pieces of paper, instead of things, then I don't. And all those things are made elsewhere, and everyone is seeing that they can buy those things from elsewhere, then I don't see there are many ways that people are going to look at the U.S. dollar. And the U.S. is one of the few countries, like the only large country, that's really said, yeah, we're going to back crypto. We're going to try to push to be the head of crypto. There are a few countries that have said, yeah, we want to be the head of crypto and AI. And that being a big thing, especially for some of the things that we talk about, I don't see very much happening in crypto positively if the U.S. goes down. Like if the U.S. can't participate in the markets, for example, due to hyperinflation, which I've mentioned a few times before, and this is primarily due to BRICS, because people have another option now. That's why. Because if you wanted to trade before, you had to trade in the dollar, which meant that the sanctions work. Now, if you want to trade, well, you have the dollar over here on this system, and then you have local currencies over here on this system. Well, okay, we get sanctioned. We don't have to worry about that now because we can trade with these other people. I don't see them as a military force. I see them as an economic bloc. So you can trade in these other things. So Japan selling the bonds, China selling the bonds, both of them, well, not both of them, but China buying gold, a lot of other BRICS members buying gold. You have some BRICS members that focus on crypto, but the largest ones don't. Russia has been effectively kept out of stablecoins because stablecoin companies all buy bonds. They're all tied to the U.S. government. They're all essentially banks, and none of these banks can do business with Russia. China has effectively said that they want everyone to use the yuan, so they pushed a crypto out, and they're on and off again. They're like a bad ex-girlfriend. Like you're constantly on and on again, off again. They're like that one relationship from the Friends series.
Or on a break.
Yeah. They're on a break. So you see the largest players within BRICS. They don't really touch crypto. You have a lot of smaller ones though that do. Indonesia, they do a lot of business in stablecoins. They have a lot of crypto use over there. Will that continue going forward? I don't know, but they did. There are a lot of other small countries that did as well. Will any of these come back? Will any of these be affected by the market if the U.S. goes down? I believe so, because a lot of the money in crypto is from the U.S. and Europe. Europe is tied to the dollar, and the U.S. is tied to the dollar. Everyone within the G7 effectively is tied to the dollar system, as opposed to BRICS. Now, will they look elsewhere? I don't know. Probably when things get bad enough, but for right now, they're still tied to the dollar. And as all those bonds come flooding back, well, you have a lot of money that can start inflating things. You have a lot of people already buying gold, buying silver, buying copper, saving nickels and other things just for the metals, and trying to find a way to protect themselves against inflation. If this didn't just happen this year, it happened last year, and you had people realizing, oh, maybe the preppers weren't like you don't see people laughing at preppers anymore. Yeah, you had people looking at preppers and thinking, oh well, maybe we should buy some cans of stuff since those will store for a few years, instead of just laughing at these guys. Maybe they were a little bit right. So you don't have anyone laughing at the preppers anymore. You have and like I said, you have people buying up metals. When do people buy metals? The only time people actually buy metals is before large inflation runs. That's the only time.
What kind of metals are we talking about here, right? I mean, that's because industrial metals like copper, nickel are always those. I agree. I mean, if you're talking about precious metals, or you're talking about like base metals, there's a difference.
Gold. Are we talking about like gold and silver, right? And gold, silver.
Yeah, gold, silver, and copper, because copper is the third currency metal, and people are storing. People have been talking about storing nickels, not because they hold nickel. There's very little nickel in nickels.
Yeah,
like in U.S. nickels, there's very little actual metallic nickel in those. They hold more copper, I believe, than nickel. But you have people storing up on gold, silver, and copper. In order to try to stave off inflation, to have something that they can trade with for cases like that, or maybe they won't be able to do it, but they're still buying it. And when do people buy that? Like the only time I've ever seen people buy that is in cases of inflation to prop up on that.
Yeah, I do remember.
Makes sense.
I think it was like this one TikTok where this person had said, in case of like inflation or any like major world event, it's good to buy up some gold, silver, have some Swiss francs and euros, and I think also some US, if I'm not mistaken. I don't remember. I know they said the person said gold and silver is good just to have that.
Well, I mean, silver normally, historically, no, right? So silver was much more of the risk on asset, and gold was much more of the risk off. So you could actually build a pairs trading strategy based on gold to silver. The way gold and silver are behaving now in lockstep like this is not necessarily normal, okay? Because normally silver is much more of a risk on asset. So it's just silver is fundamentally changed because of the requirement. I think silver is a key component in some of the AI systems right now. I think it's needed in some sort of I don't remember where it was, but the demand for silver is not solely just based on, let's call it, behavioral aspects or psychological aspects. So whether or not there's been some kind of structural change to the whole relationship of gold silver as a result of demand for silver for industrial applications, that's what we're trying to see. But I mean, look, no, obviously the demand right now for gold, and I mean, to me, I think, as the way David said, it's I think the conversation then shifts to what the hell's going to happen with the U.S. dollar right now. And I think the three of us have agreed that we're all pretty bearish on the U.S. dollar, right? So, and I think that's by design. I think Trump wants to devalue the dollar for many reasons. So and that also goes lockstep with interest rates. He wants interest rates lower. Lower interest rates going to lead to a lower dollar, all that. So gold is being sought after really as the risk off or just the compensation for no one's going to want to hold the US dollar, and because potential rising inflation, safe haven asset. Silver's in demand really for, I think, a lot more for the AI. And I think I also just think the speculators have really, like, I mean, the chart is insane. I mean, the rate of change on, like, it's just gone hyperbolic straight up. And normally that doesn't last very long. All right. From a technical analysis point of view, when you're going up at like a 75-degree angle, you're pretty prone to a sharp correction very, very soon. And then the volatility is showing it. So, but that's just like, gold and silver, and what they're reacting to is just really, I think a lot of it's just based on the US dollar. The US dollar has been depreciating. What direction the US dollar is going to go in, don't know. My guess is down. But I think the other thing to think about, when we're talking about this, right, because I think it's also like, if we link it all together, right, let's put this all together from an asset allocation kind of point of view. So you have cryptocurrencies, you've got traditional assets, let's call it stock bonds, and let's say then you have precious metals. So even the oil we can throw in all of. What's the relationship between all of these? Like, what is going on with all of them right now? So stocks, I mean, you do have a lowering interest rate environment, so there's increasing liquidity supportive of stocks. Precious metals, well, there's still inflation going higher than the 2% target range. You have a weaker US dollar. People are adding more gold to their reserves because they don't want the US dollar. It's positive for gold. I'm very happy I'm not buying an engagement or a wedding ring right now. I can only imagine what prices are like for that. I feel bad for anyone that's looking into it right now. And then when you start looking at crypto, and like, to me, this is where I'm more uncertain than I am with the other asset classes. Stocks, I'm saying ride it. Stocks look great. Like, I have no reason to say any reason why you should not be in the stock market right now. Zero reason. I have no reason to say why you should not be buying gold and silver right now. Just purely based on momentum. And then when I look at crypto, then I'm like, okay, I have no idea what to do right now. And that's what I think a little bit of the divergence between a lot of these are. So even let's say like Ethereum, right? Because we've been talking about Bitcoin, so Bitcoin is the primary one that would be used by countries, sovereigns, as a store of value. And as I understand it, please correct me, they would most likely be using Bitcoin to trade. Is that correct?
Well, you have a lot of people storing in Bitcoin, but I don't see anyone using it for trade. I see more activity on Ethereum, and that includes with stablecoins themselves. And a lot of trade has been through US dollar stablecoins. So that a lot of that has been pushed by investors, and investors recently. Well, here, like a few years ago, I pushed a chain to basically bring Forex into crypto. Investors at the time said, why not do everything in the US dollar? And they wouldn't hear no arguments counter to that. They were basically telling me, oh yeah, you're an idiot for this.
So
let's
think about Ethereum then. Sorry, go ahead.
Yeah, roughly 3 years later, they're saying, what are they saying now? Oh well, we should bring Forex on chain. So they don't think that staying in the US dollar is a very good idea either. And where most of the stablecoins are on Solana and they're on Ethereum.
I want to talk about Ethereum actually for a second, because we've been so focused on just like Bitcoin prices and like that. Because I think, aside from just thinking of the currency as an asset, I want to talk about the technology, because Ethereum has some, I believe, okay, I think David, both of you guys should know more than I do in this case. I'm an asset manager, but there's two major events coming up, I think, right? We have this, I think it's called the Fusaka fork that's coming up with Ethereum. So Ethereum, the network has some major upgrades coming out this year. So what effect is that going to have on Ethereum? Because the way I look at it is like, when people come up to me with the argument, what the hell is Bitcoin? Why should I own it? I don't really have much of a response. When people say, what is Ethereum and why should I have a much better answer for that? I have a much better reason why somebody would want to own Solana or Ethereum than Bitcoin, other than Bitcoin is just the most widely circulated one and the one that most people trade. So but with all these upgrades coming out and an improvement to the network, and if more and more, companies are starting to put these things on chain and using both L1 and L2s. I mean, the L2s have made, like Ethereum L2s have made huge leaps, almost to the point that they can compete with L1s. And like, what effect is this going to have on Ethereum? What's the outlook for Ethereum given the upgrades that are coming out this year? Are you guys aware of them? And you have any thoughts on this?
Well, if I had to say, right, I think most people don't realize Ethereum is mostly a utility-based cryptocurrency. So Bitcoin is more or less for like holding. It's let's say it's an inflation border, like it's to help stop with inflation. But Ethereum is mostly like utility-based, right? You have like all these, zero knowledge. You have this L1, you have L2, right? And it's only going to get better as time goes by. And it's also going to let the value of Ethereum go up as time goes by.
Well, I mean, that's the way I see it. I mean, the Fusaka fork is supposed to like greatly enhance the network to the point where the gas fees are going to be much lower on L2s. And I mean, if I'm just trying to figure out eventually how this network, the network effect here and the transaction processing on these networks, what's going to do for the value of Ethereum. I mean, in theory, like Ethereum, we keep on saying this I think should be trading so much higher than where it is. Why isn't it?
Well, I've got a thought there as well. Like you heard me bring up the thing about investors, and yeah, investors have a lot of money and they can move things around, and they have connections. But will those connections come on chain? From what I've been hearing with regards to crypto, the only thing that I've not seen any new news. The only thing that I've really seen from the crypto market is good morning. Like every single post is just GM, or like in Noble's case, Noble morning. I don't see any crypto news. Like what are you doing? What are you building? Like what's your next update going to be about? Like no one's talking about it. They're just saying good morning and trying to find a way to gain Twitter. And there was literally a video that popped up about this saying, oh yeah, Twitter, a Twitter guy responded. He put out a post saying how to grow your account on Twitter. And then you had all the crypto guys responding to that saying, oh wait, so you mean that we're not getting that all the engagement we're getting on our good morning posts isn't doing anything? And he said, yeah, like that's basically it. You're being treated like bots because you're just putting out spam. And you had these guys researching this and literally saying themselves, like, yeah, while I was researching this whole thing that's going on between crypto guys and Twitter, I learned absolutely nothing about crypto. And so if new people can't find out information about crypto, why would they join? So you have investors who are opening up to other thoughts instead of just the US dollar, which supports US dollar falling, US dollar being one of the biggest players within crypto. And then you have all these other people who are just looking at crypto and thinking, well, I'm not learning anything about this. So if they originally think, which most people do, that crypto is a scam, and when they look at crypto to find out more information about it, and they only see people saying good morning, so they can't get any new information. And the people who are already here are also bearish on the space, in whether directly or tangentially through the US dollar. Well, I don't see very much good happening for the space. Maybe for the short term, maybe a lot of people who are holding their money in stablecoins throw it in on Bitcoin for a period. So maybe for the short term that benefits the market. Maybe for the short term that benefits a crypto within the market. But long term, if things continue as they have, I don't see this going up.
That's too bad. I was looking over some of the research that I found over the past weeks. Like Standard Chartered has a 7,500 target price for Ethereum for 26, 40,000 by 2030. Mm-hmm. The consensus range right now is 6,000 to 8,000 for 26. That's a huge range.
When I look at investors, I just see them as lemmings. So like you have all those investors, like I said, 3 years ago, they could not see anything outside the US dollar. Now they're all looking at putting Forex on chain, which I was talking about 3 years ago. Mm. Why couldn't they see it then? And like I made every possible argument for it. And why couldn't they see it then? Because I talked to every guy off of every list, every investor off of every list, and none of them could see it. And these guys, whenever banks put out projections, whenever their experts put out projections, what do they do? Well, when the market's going down, they put out really bearish projections saying, oh, it's going to drop to zero or anything or something like that. When it's going up, they say, oh yeah, it's going to go to 1 million. Like, these guys are lemmings. I don't see any benefit from looking at
Behavioral
anything.
finance. It's all cognitive biases, the anchoring effects and things like that.
Yeah.
All right, so let's because we're getting probably towards the end here. I want to, if you guys are okay, but what about Solana? What are your thoughts for Solana this year? Do you have any expectations for Solana?
I personally don't, seeing as how last year I guess it was a bit on and off. I think it hit a new all-time high of like 500 to 600. Correct me if I'm wrong. I have not been studying Solana too much, but I think probably if Solana is a little bit bearish this year, I think the use of NFTs might roll up, because Solana NFTs are a lot more up there than Ethereum NFTs in terms of like the usage and utility. But I do have high hopes for it going into 2026.
Solana hit a peak just around just below $300 at the beginning of 25. And I'm looking at the chart right here. Like the long-term chart of Solana just shows an insane amount of resistance. Like anytime it gets close to 260, 250, 260, it's always reversed. Yeah. I mean, it's got some support around 100-ish, 110. Right now it's at 141. So, I mean, when I think about the technology for Solana, it just seems so exciting. And they have all these they also have a number of these things coming out. I've read about these catalysts. There's the Alpenglow and the Fire Dancer. There are 2 technical upgrades coming out this year that, should be very positive for Solana, but I guess it's still a wait and see. But, after what I've heard at Token 2049, when I was there in September, and how everybody was talking about Solana. Everybody was building on Solana. So I'm just wondering if this isn't a make it or break it year. I mean, we say that all the time. This is the make it or break it year for Bitcoin. We've been saying that for 5 years now, probably straight. And we'll probably keep saying it. But I'm really curious about what's going to happen with Solana. I mean, right now it's stuck in this trading range, and I don't know.
It might follow like XRP, quadruple within a couple months of Bitcoin going to a new all-time high. But you never know.
Never know. So here's my last question for you guys, okay? And it should be a short one. What do you think will be the dominant headline affecting cryptocurrencies this year? And let's say aside from Genius and Clarity, let's remove that, because that's the obvious one. What do you think what would you think a dominant headline for crypto will be this year?
David, if you want to take that one over.
I don't know. I tend to not think in terms of months, but years. So for 1 year, that's going to be that would be very difficult, because that'd be measured in months. With that, I don't know. I think crypto is probably going to be roughly similar to what we've seen for this year. But longer term, I don't like where it's going. With things like Bitcoin, we see some positives in that other countries are holding reserves, even though they've not mentioned that. Much like El Salvador, which is literally the reason I bought into it. I saw companies and countries buying Bitcoin, so I bought in and I wrote that up. With regards to crypto as a whole, you see companies buying into Ethereum and Solana via stablecoins. But you see economic groups like BRICS building their own crypto rather than buying into other cryptos, which means that market cap is not going to those cryptos or the crypto market in general. It's going to their blockchain system, which is a Forex system, like what I built. You see investors, both small time and big time investors, talking about crypto, talking about the US dollar that's going down. So people are finally seeing it. You see them talking about crypto as well, about things like new people aren't coming in. And so long term, I see it going down. Over the course of this next year, I don't know. I think a year is probably too small. Now things have been going fast. Things have been accelerating. So maybe it drops a little bit. maybe it does because of everything that's going. I like things are happening a lot faster than what I expected. So like recently at least. So that could very well happen this year that it drops. Like maybe it jumps for the short term on near term news as people see, oh yeah, well the oil's going out and maybe things are stabilizing. U.S. didn't invade Greenland after all. Maybe things are stabilizing, or all these things. So maybe it jumps for the short term, especially as new companies come in and everything. But over the long term, as people figure out, oh well, things aren't moving in this direction, I think that probably is going to drop after that, because like I said, BRICS, an economic group that's focused on local currencies, not stablecoins, not crypto, but payment in stablecoins of local currencies. They built their own network, which means that that's not going out into Ethereum, that's not going out into Solana, that's not going out into Bitcoin. It's going on their network, one that they built.
So go ahead.
Yeah.
You're up, Gio. Go ahead.
Well, I personally think, I'm not sure, but a great headline would be where crypto is headed, right? I think, adoption right now is at like 10% globally for crypto. And, based on, it's not really like a big barrier to entry. So I would say it's fair game. It's anyone's game right now, really. Right? The market could go left or right now.
My call is AI meets crypto. I think we're going to see an AI meet crypto craze. We're going to see mass amounts of startups trying to do decentralized machine intelligence in the crypto space. Yeah. I think we're going to see a lot of that. I think we'll see a lot more of AI, like using AI to verify a lot of stuff going out there. Like, pretty much just in terms of the deep fakes and everything to get rid of the fraud potential. I think we're going to start seeing a lot more AI for compliance and for fraud risk in crypto. And then I'm going to start saying agentic AI is going to start being adopted a lot in the cryptocurrency space. So in other words, trying to have AI agents autonomously negotiate services on chain. That's my call.
Okay. Do you think any?
Sorry, dude.
I thought you were talking about bull or bear predictions, not stuff.
No, it's a dominant themes. Like, what were the dominant themes of crypto? Like the headlines. It could be that. It could be anything. That's the point. What do you expect to see? And having us say different things is not bad. So never know. Might even see real world assets starting to generate a revenue. Who knows?
Do you think AI-based tokens are going to be a little bit more bullish this year?
Not necessarily AI-based tokens, but the use of AI within the blockchain, right? So just incorporating AI into the whole decentralized nature of it, So, it's more like open source AI development and having it be integrated into the whole on-chain environment, and especially when it comes down to using agents to start executing a lot of the transactions.
Actually, that is how I'm hoping to have it out for by the time before we do the next one. But that's how I've been building out this AI wallet. I've got a like I mentioned offline, I've got a router between different chains, between different coins. I've got an AI service that I've got 4 test groups left to go through on, and then some back testing, but then that's ready. That connects all of the wallet services to AI, so you can just say what you want to do, as much of what you want to do, and it'll take care of all of it. And I'm hoping to show that off. So no need for complexity in crypto anymore if this actually works out.
Oh, I can't wait to see it. Yeah, I mean, agentic AI is really exciting. Like I've started building a lot of agentic AI for more administrative stuff, and I'm not ready to trust it for trading or to make trade decisions. But just like, for example, at the end of every month when I have to update, let my quant models make predictions for the next month, I very often have to review the investment universe. Companies are bought out, ticker symbols change, and new additions to the market I won't buy in right away. You have to be on the index for at least a year to be included in my universe. Otherwise there's noise, right? Somebody gets added to an index, they shoot up, and then they just gradually drift down. So your calculations will make them look amazing, and then they won't do anything. So instead of me going through 500 tickers of the S&P 500 or writing a script to compare it, I wrote an agentic AI system where now all I have to do is upload the current holdings of an index, compare it to the previous holdings, and it spews out a whole report where I have 3 different analysts. I've got one analyst that looks for news, looks for M&A activity for any ticker, and will report back if any of the tickers is subject of being acquired. Then there's another analyst that's looking for additions and deletions. And then there's a CIO that's going to challenge each of the analysts to make sure that their work is correct. And then it's the CIO who will make the final decision on which names should be removed from the investment universe. And it's working incredibly well. And I'm using DeepSeek for it because it's so damn cheap. So as David mentioned many times, DeepSeek is just so much cheaper than all the other. We're talking a difference between 1 cent instead of 2 or 3 cents, but that adds up. The whole point is that's still half the cost. Yeah. So I'm really excited by agentic AI. It's still very early. It's still so crazy early. You got to be so careful with this stuff. That's it.
Yeah, that multi-model system is the one that I always push for, especially with having an additional layer on top of the other layers as a review system, because that's literally how our brains work. So yeah. Why would you not do that? Like, if you want to have something that works in a complex manner, why not model it the same way that we work? Because
I agree.
For us.
Mm-hmm.
All right, Gio. I think we've hit our hour.
Yeah, have we gone over like how we normally?
We're just under an hour, I think.
Okay, I guess we can close episode 9 off, unless anyone else has anything to say or any other topics. You
I
guys
gotta save some stuff for next week.
Yeah, sounds good. So, thank you everyone, for joining us on episode 9 of the Crypto and Coffee podcast. Again, we appreciate you guys tuning and listening to us, around a little bit about, geopolitics, AI, and Forex, all that good stuff. So I guess today we'll close off episode 9, and thank you guys for watching and listening.
Thank you very much, everyone. See you soon.